Hi, Jeff.
Hey, Meesha.
Welcome back to another episode of the North Atlanta Real Estate Market with your amazing host, Meesha Rawal.
And Jeff Ahi.
And today we're looking at a very specific time period, March 1st through March 24th. And we're asking whether this war with Iran may already be affecting the real estate market, along with other economic factors which could be pushing or pulling down our market.
Yeah, and so I think one of the things that we're also trying to see is, is it affecting our market here in North Atlanta more than it's kind of the broader metro market in particular? So we're going to look at that question as well.
Yeah, because we are seeing some differences.
Yeah, we are. When we pulled up the data this morning, and we're looking specifically, like we said, March 1st through March 24th of this year, and we compared it to the same time periods in 2025 and 2024, we're down. The number of sales are down about 20% compared to 2025, and 23% compared to 2024.
Yeah, and it's too soon to report how it's affected the market. But when you compare that to Metro Atlanta overall in similar price ranges, Metro is down less, about 12.25% versus 2025 and 15.25% versus 2024.
Yeah, so I guess it's so our area appears to be a little softer.
And the question is, why?
Yeah, and so we did chat about that a little between ourselves, and I think what we believe is going on, and I think it proves out, is that in the North Atlanta market we have a higher median price point than if you're looking at in general metro markets, and when we have that higher price point, we're going to have buyers that are going to be more tied to their stock portfolio, right? And so their investment accounts, of bonuses, and this overall wealth effect, right?
Yes, absolutely. And if your stock market, your brokerage account takes a hit, the higher end buyer may react a little faster than, let's say, an entry-level buyer.
Yeah, exactly. And, a buyer that's maybe at the $500,000 price point is going to be maybe mostly worried about their monthly payment, whereas a buyer at $1 million and up, they're going to be thinking about what just happened to my brokerage account.
Yeah,
right?
Yeah, exactly. The Bitcoin, the cryptocurrencies. Yeah. And, and I'm also seeing this in real life because I have a buyer who has been looking for houses in and around this area. And about 5 days ago, when the market took a big hit, he said that he lost about a couple $100,000 that he was about to use towards a down payment. And he had thought about selling his stocks about 2 weeks ago, like a certain portion of his stocks about 2 weeks ago. And now he's like kicking himself that he should have done that, and he wanted to use that money towards down payment.
Yeah, right. So, suddenly a deal that looked comfortable and easy all of a sudden doesn't feel so comfortable anymore. So some of those people are going to maybe rethink their timing, right?
Yeah, they may end up buying. Yep. It doesn't mean that he won't buy, but it possibly changes the conversation.
Yeah, and so that's sort of what gets to what's really happening here. This might not be a direct war effect right now, but it may be a little bit more of uncertainty, right?
Yeah.
We just don't know what's happening.
Yeah, and and not just uncertainty about the economy, about the stock market, about inflation. It's also uncertainty about the oil prices and about what your mortgage rate might be headed to next.
Well, yeah, and speaking of rates, that's another part of the story. Rates had actually been improving earlier this year. We started this year and we were like at 6.17% or so. And we actually got down to, I think it was even as recent as March 5th, we hit 6% flat.
It was
30-year
under
fix.
6
yeah.
also.
You could definitely find it. This is just sort of a mortgage news deal. Yeah, you could definitely find under 6. And so now what has happened is, as of yesterday, it has climbed because of the fears of inflation sparked from the increase in oil prices. Yeah. Now the rates had jumped to 6.55%. It jumped up over 0.5% in it's not even just over 2 weeks. Now, today, we were looking at the 10-year Treasury before we started this podcast, and it has improved a little bit today. So we can probably expect when this new survey comes out tonight, probably that's going to go from 6.55 to maybe probably 6.5%. Gets a little more improvement. And so if this war does wrap up and they somehow open up the oil supply and oil comes back down, I'm sure rates will drop back down as well. But that's not a given at this point, is it? Yeah.
And we were talking about the entry-level buyers. It's going to affect their monthly payments. And, a buyer who's at $500,000, and maybe that's the top of their price point, might feel this a lot more than someone who is a high-end buyer. And so when buyers were starting to get a little hopeful, now their optimism may be getting interrupted.
Yeah, exactly. And it matters because this market was already, kind of fragile, right? It doesn't need another reason for people to hesitate.
Yeah. And I feel like hesitation is a big deal in real estate. So when I have buyers who suddenly go quiet and I'm like, okay, what just happened? People don't have to be completely unable to buy. They just have to feel a little less sure.
Yeah, that's absolutely right. Because real estate is not just math. It's lots of it's confidence. Does the buyer feel good? If they move, and do they feel nervous? They wait. I mean, that's just the way it goes.
Yeah, and when you are rich, when you have money, when you are looking at a certain higher level price range, waiting is easier. And those buyers often have more discretion. This is probably going to be their second house, or they're already in a house and just looking for an upsize. They may say, let's just sit tight for a month, 2 months, and see what happens.
Yeah, and when enough people do that at the same time, then activity drops. And of course, if you have a drop in demand, you can have these little troughs where prices might drop down. For those that have to sell in the next month or two, prices may come down a little bit.
Yeah. And another thing that we are starting to run into is, when you and me go door knocking, is people who bought their houses back in 2022, 23 and 24, as early as 2024, and their home may not be worth today what they actually paid for it.
Yeah, and that can be painful. I mean, we were talking to that guy yesterday. It was a townhome community in Johns Creek, and he was telling us he paid $630, right? And we were just showing him because we were asking him. The one next door to him, which was really upgraded, sold or was in the 575 range, right? And then there was and that sold fairly quickly because it was upgraded. But there was another property in his community been on the market since October for 520, same size home, and they're all almost identical.
So he bought it in 2024. That's what he said about 2 years ago. Yeah. And then if you look at it at today's rate, he paid $100,000 more, and his interest rate was probably in the mid sevens, maybe even pushing high sevens.
And even though interest rates are slightly better now, it's not so dramatically low that he can refinance and get this huge drop in his payment. So this poor gentleman is kind of, it's kind of stuck, and it gives us, we've all been through the bad parts of the market. It kind of reminds us what it was like for 2009, 10, 11, where so many people were underwater. We don't have that problem now, but we're starting to see it in certain cases.
Yeah, and there's this other house, 2251 Grovemont in Duluth, which sold in 2022 for $382,000. So one of my investor clients had bought a house in that same community, and they were looking to buy another investment property in that same community. And this house popped up, $330,000.
Wow. Was it similar to the other one?
Completely upgraded. So my investor buyer was like, did we overpay when we bought last year for $330,000? The answer is no, they paid the right price. But this guy in 2022 overpaid by about $50,000.
Wow.
And now he was trying to sell it for $330,000. It did go under contract, but goes to show that a lot of people might be losing money if they bought their houses, overpaid for their houses, back when the market was crazy. And there was this other gentleman that we met in Johns Creek who said he bought his house for right about $550,000, and then he put a new siding, new roof, new floors, and then he'd be happy to sell his house for $600,000. So he'd pretty much be breaking even when he sells his house.
Yeah, so I think the point here is it's don't panic, the market's not falling apart, but there are going to be certain people that might have paid too much in a particular situation when there's a bidding war and you get really into it and you bid that price up. It could be tough to sell right now in certain circumstances and get out of it whole.
It doesn't necessarily mean that there is like a huge collapse, like you said. It just means that if you bought at a very aggressive price and you may have to resell too soon, there may not be enough margins there.
Yeah, especially when you're factoring in commissions and closing costs and moving costs and prep work to get the home up to snuff. Yeah, absolutely. Yeah. It gets uncomfortable pretty fast.
And I think some buyers may need to hear that real estate is usually a strong long-term asset. But in the short term, like you always say, if you want to hold the property less than 5 years, then there is a real risk. So just assess your situation.
Yeah, I think that's great advice, actually. And so,
That you give typically.
well, I try to tell people because,
Yes.
I mean, buying a house isn't always a good idea. I mean, oftentimes it is a great long-term idea and you can build long-term wealth that way, but it's not great to do on a short-term basis. And so, it's when if life changes quickly, your job moves, you have to go over to California, divorce or financial stress, whatever, you haven't had time for the appreciation to have occurred. And just on this one point, I would speak to our townhome buyers and condo buyers is like, you have to make sure when you're buying that what you're purchasing you can rent perhaps, because if you do have to move to some other market and you are forced to sell because there's restrictions in place, it can happen in single family subdivisions too. You could really get in a bind, and we've seen that happen before too.
Yeah. And now, we've got several things going on at once. We've got the rates that are still elevated, the stock market volatility, the geopolitical uncertainty. In some cases, recent buyers are finding out that the houses that they bought like a few years ago can be riskier than they expected. The market's not always going to go up.
Yeah, I mean, that's so true. And so when you put all that together, it kind of makes sense that our North Atlanta market might be reacting a little more sharply than the broader market. But I do want to say it's not just, we didn't go and dive deep into, let's say, East Cobb or Buckhead or some other affluent pockets that are probably experiencing the exact same thing we are. I would say it's more of a price range thing and a buyer profile and seller profile thing than it is different areas. I think it's the areas that have the more affluent buyers probably got their stock portfolio hit more, and they're probably just backing or a little more cautious than like we've talked about before, the $500,000 buyer.
Yeah. So what we're trying to say is, well, the buyers often have more to lose. They also have more options and more ability to pause that some people who are on a budget might not have. So what should we take away from all of this, Jeff?
Well, I mean, I guess if you're a buyer and you're in that upper price bracket kind of thing, maybe make sure you're not relying on every dollar in your stock account being there at exactly the right time. And so maybe kind of as the advice is, if your kid's going away to college in a year, don't have your stock portfolio be super risky because you need access to that money quickly. You need to be in a little more conservative, maybe get that money out or get a large portion of it out. Because you can't count on the change in the stock market to continue to happen, right?
True. And if you're a seller, same thing. Pricing correctly matters even more in an uncertain market. So buyers get cautious very fast, and overpriced homes become even more vulnerable.
Now, this is something that we have seen, and I think as agents, we've heard the term, catch a falling knife. And if we do get a pocket of softness in the market because there's a drop off in demand, what you're going to see is some sellers, they still want to keep feeling like prices haven't changed. And if you just don't adjust to a market that's changing and you start adjusting your prices a little bit lower each time, you never get out in front of a falling market. So we can't say yet that we're having this falling market, but I think it's one thing that we're going to keep our listeners up to date on. If we start seeing these trends, we'll tell you, and then you need to be careful, and we'll talk about that maybe again, how important the pricing is.
True, yeah. We'll connect the dots for not just for ourselves, because we are agents and we pride ourselves on being on top of our game, but also for our listeners. And if you bought a house in, post-COVID, 21, 22, 23, and you're worried about value, the answer is really not to panic. The answer is to get real neighborhood-specific data and find out exactly where you stand. And, when you and me, we go door knocking, we always ask families, do you want a market report of your neighborhood or what's really happening in your city? And most of the times people are like, yes, absolutely, send me the market data, because even though you're not planning to sell and you want to live in that house, you also want to know how your market is doing.
Yeah, I think we can obviously extend that to all of our listeners. If we get flooded with 1 million requests, it might take a few days to get back to you, but please do send in. If you're curious about what your specific home is worth and what's going on specifically in your area, just send us an email, call us, text us, what have you, right? We'll be happy to help out.
We have amazing resources at our disposal we have amazing resources as agents at our disposal that we'll be happy to share. And we talk about this, one subdivision may be okay, one floor plan may be fine, and another might be under pressure. Real estate is always hyperlocal.
Yeah, so I guess to wrap this up, we do think that there might be some impact from this war, and it's probably indirect through confidence and interest rates, jumping quickly, and the stock market volatility, which might have hit some people's stock portfolio more than others. And so, I guess we just think that right now, just this market requires just a little more caution, a little more realism, and definitely keep attention to pricing and timing, I guess, right?
Yeah. And so, do you think we should wrap this up?
I think we'll have to say goodbye.
All right. So stay smart, stay informed, and stay tuned. This is Meesha Wall
and Jeff Ahi
saying goodbye.
Bye bye.